Welcome to another S&P 500 analysis. Today is December 1st, 2021. It appears sometime during the day, the market decided to catch the Omicron virus. So what give? I mean, the market sold off, but as you can see from this chart here, we've seen the market is already showing sign of weakness from the early morning run-up before the noon hour. And then after lunch, and when the crowd come back from lunch, they just decide to sell them off. And after all, today is OPEX Wednesday, so could it be some sort of a trickery and shenanigan due to the OPEX? So stay tuned. We're going to take a look at some of the indexes and some of the price action along with the internals. All right, let's first start off with this intraday chart of the S&P 500. As you can see, the S&P 500 kind of peak out somewhere between 11:30, and then it started to sell off. And as you can see, that the new high, new low been running negative. In other words, ever since the open, even though we have a positive open, there were more new 52-week low than 52-week high. And although we did get some positive action in terms of the up-down volume ratio, and it was actually positive up to the point of 9-1 early in the morning in favor of the up volume. But as you can see, we closed with a 4.5 to 1 in favor of the down volume, and also closed with 204 more new 52-week low than 52-week high. And the VIX is finally went above the 30. So obviously the market participant getting fearful now because it is, went to this 20-30 zone. So pay attention to the extreme fear level when this VIX getting up to that 40 or higher than 40 level. Then we will look for, extreme and also some sort of capitulation. And, that could be a form of people just giving up or margin call and everything, but whatever, we really don't care what's the reason, right? We only care about the price action. After all, we are trading based on price, not based on whatever the reason. So by the time anybody that could conclusively, and which I doubt anybody could conclusively find out exactly what drives the market, then it'd be all over. So in other words, just trade the price. And also we look at the put call ratio is coming up at 0.68, although it's still underneath this 0.7 in my criteria. I want to see it get above that 0.75. So when it gets above that 0.75 and toward that 1, then we know market participant are taking off risk and putting on hedges. And also the advanced decline, there are 1,353 more declining issue than advancing issue, but as you can see early in the morning, there were more advancing issue than declining issue by margin over 2,200, more advancing than declining stock. So you can see that's quite a turnaround in the afternoon, and essentially when these people, after 1:30 or so, you can see that it just, starting that sell-off, and that could be due to OPEX. Or you could say due to, the market heard the news that there was the first case of the Omicron over at San Francisco, or the beige book, and, all those good nonsense. But whatever reason you want to attach to it, that's great if it makes you feel better in trading these price. But to me, as a trader and looking at the technical and the market generated information, all I'm concerned is what the price is doing. I don't really care what's driving the price, okay? Because we trade the price. We don't trade the reasons. Now, if we just take a quick look at the S&P 500 on a weekly, so far we have a range on the the first 3 days. It's basically 162, close to 163 points, and it lost a little bit over 81 points for the week so far, or 1.78%. And here on the daily chart, you can see that from the high here, it basically I got a Fibonacci retracement that I set up here, and you can see that it is retracing back down to this 50% level. So it's inside of this retracement zone. Could it get further lower? Yeah, it could. I mean, it could come down to this 38.2, somewhere around 44.62 area. And that would be also in confluence with this lower price channel trend line here, right? But if we get a bounce up here near this 50%, I wouldn't be surprised either. So I'm basically looking at this 4,500 level, one of the psychological, level to keep an eye on. And also we do have a couple of these gaps here that could get filled before, the market kind of bounce back up again. But once again, we're still looking for a new all-time high for the S&P 500 based on the ES, right, on the price structure of the ES. We'll take a look at that before the end of this video and just to remind ourselves what to look for. So just to update our chart here, as you can see from the previous chart, I have a Fibonacci retracement here. And I'm going to take this one off because the price retraced back underneath this 100%. So now it's no longer valid in my usage of the Fibonacci retracement on this particular swing, because it basically have already swung out to this 141 and then now it's pulling back below this 100. Then I'm basically interested in this new swing now. So what I'm going to do is I just going to go and update that on the next chart. The next time when I do the video, I basically have shown you that in the daily chart earlier of these gap here in the 50% level. So these are the level that basically going to keep an eye on right now. I remember this 4,500 got pretty close today on the ES. It actually came down to 4,502. So we could still see it come down and fill this gap here, right? Or it could even come all the way down to fill this gap, and that would be testing this lower channel trend line here, right? So let me just go ahead and update that Fibonacci retracement so we could see it anyway. And let me put this on here. So there we go. Here is this 50% retracement level here at 45.17, and today the low here is essentially 45.10.27. So we're going to keep an eye on this this gap here. It filled this gap today, so we're going to keep an eye on this gap here somewhere around 44.97, basically 4,500, right? So if you come down, dip below 4,500 and get below here at this 44.86 or 85, then this gap get filled. Then if it proceed down to 44.46 or somewhere around the 44.45, then we pretty much got this gap filled as well, and essentially come down to basically test this trend line here. And that's what we see when we get a bounce back up. Like I said earlier, we're still looking for this high to get taken out, and we're going to take a look at it a little bit more later on the ES, the EMini SP500. And here looking at the SPY, the ETF for the S&P 500, you can see it's coming down. It book is 453.90, right? That was one of the levels that we're watching. So right now we're essentially looking at this 448. Right now it came down to 451. Notice where it pinned, right? 450.51. That's where it closed. So that's sound like a one of those strike for the pin on the OPEX, right? 450.50, right? So once again, we're going to see if we'll get a bounce tomorrow. If it does, then we're basically looking for it to come back up above the 453 and then this 457. But if it continue to come down, look for this 448.25 area. Essentially watch for this gap to get filled. Then throughout the remaining of the week, you just kind of keep an eye on these high volume node here, somewhere around 445.50 and also 443.50 area. Okay, but the key level to watch right now is this 448 area here, and let's see where we get a bounce back up to this 444, 457 area. And for the NASDAQ, the NASDAQ 100, remember we were saying that we need to see it come back up above this 127 at 16,445. And if it could stay above that, then we're essentially looking for a possible new high to push to the 141 extension up at 16,833. But right now, we're essentially looking for it to come down now for retest of this 15,701 to see would it be able to find some support and bounce back up. But if it doesn't, then we're essentially looking for this thing to come down to this zone here, somewhere around this 15,345. And that would also negate this particular Fibonacci retracement. Then I will put in this particular Fibonacci retracement here, right, somewhere around here, and use this swing, and then we basically are looking for this 382. If it come down to this level, 15,345, essentially to come down to this 382, but it's still pretty much inside of this retracement zone. So if it come down here and get a bounce, that would be still valid. But if it dip below this 382 and come down to this trend line, then we have to be pretty cautious about the possibility of going lower. And for the QQQ, the ETF for the NASDAQ 100, you can see that it came down to this 387 and a half here. So right now, we're basically watching if any further downside is look for this 382.78 level here. Then if it continue to come down, we'll basically just watch these high volume node here, right? 379.75, so probably somewhere around 380. And also this low volume node, 378.50, high volume node, 376. So we'll update. I update this along the way, on my Twitter stream if we see some new level that could be in play. But right now, we're basically looking at this 382.78 and see would it get a bounce back up. And we might even get a bounce tomorrow off of this, this price zone here, 387.50, and then work itself back up to this, 394, 395 area. And for the Russell 2000, remember we were talking about this coming back into this balance area, and we essentially are looking for a retracement back to the bottom of this balance area. So it's getting close. Today got down to 2147.40. So we're essentially looking somewhere around this 2134, 2135 area. So we'll see. Right? It might dip below that and then come back in and then see would it be able to bounce back up or would it continue to slide down. And we essentially are looking for a range extension on the downside. Remember, we have a 1x upside here at 24.98. But we also have a downside here at 1951. And for the IWM, the ETF for the Russell 2000, see that it dipped below this 214.45. Essentially, right now, I'm looking for this possibility down here, somewhere around these low here, right? So essentially, these pivot low here, and that could be somewhere around this 210 level. Okay, so basically that's the level that I'm looking for. And if it could bounce back up, then the first level that we want to watch is this 218.55, and then this composite point of control here at 221.70. Need to a lot of work for the Russell 2000 or the IWM to get back up to this 228 and 229 area. All right, we're just going to take a quick look on the other indexes, transportation. Dow Jones Transportation is coming down, and we are looking for this to check this 15,346 and eventually come down here to this 15,000 level and fill this gap. This gap been sitting here unfilled for quite a while, so maybe this time it will come down and fill this gap here by the transportation. And for the Dow Jones Industrial, remember we were saying that it also, just like the Russell 2000, it dipped back into this balance area, and we're looking for a retracement back down to the bottom of this balance area, somewhere around 33,860. So right now, I got a pivot low somewhere around here at this 33,800. So anywhere between 33,800, 33,860. We're basically looking for this level to see will we get a bounce back up or will it continue to come down. And again, we're basically looking for a 1x extension down is 32,608. And similarly for the New York Stock Exchange Composite Index, it came back into this balance area. And once again, we're looking for this retracement down to the bottom of this balance zone, and that would be somewhere around 16,094. So it's getting there, right? Today, it closed at 16,133.89. So we'll see would it get there and would it come down and possibly check this 15,775, or would it get a bounce back up. So those are the two possible scenarios that we'll keep an eye on. And looking at the dollar is still hovering inside of this zone here. So once again, as long as it hold above this 95.70, then essentially you're continue to watch to see what the dollar come up to this area near the 97.79 zone. Now remember, we were talking about crude oil in the weekly video to look for 64, possibly if it come down and chop around in this zone here. So, but if it come back up, we still be looking at this 77 area, basically this zone here, somewhere around between 74 and 77. So keep an eye on oil, although, we're getting a little bit of a sell-off recently, but watch for this 64. If it hold above the 64, we'll see a bounce back up to this zone here. And for silver, remember we're talking about the failed breakout of this inverted head and shoulder pattern, and I'm saying that we're keeping an eye on the possibility of moving back down to this 22.72, and today it has actually got below that and it closed at 22.255 here. So wouldn't be surprised to see much lower prices here, maybe down at this low. Check this low here at 21.50 area. So keep an eye on silver, but definitely not bullish on silver at this time. And here on gold, similarly for gold, right, we had this inverted head and shoulder pattern breakout and it fell, came back in. Right now, remember I was saying that it's going to chop around at this 1804. Right now it is not holding the 1804, so we are going to see what it come down. And check this 1760 area, this right here, and then this 1716. This area here. If you come into this 1716 zone here, then I wouldn't be surprised to see a possible move down to check this 1677. So once again, unless gold could get above this 1804, then maybe there's a possibility of moving back up to try to attack this 1846. Now finally, let's take a look at this EMini SP500 market profile chart. Remember, we're talking about this poor high here at 4740.50 that was printed on November the 23rd. This price structure need to get resolved. So, so what we are saying is that we believe, okay, that the EMini SP500 future will eventually come up and take out this high to resolve this poor high, because this poor high indicate that the auction was not complete. Right, so there's basically just some anxious seller to sell and push the price down. So we have not captured the last buyer that is willing to pay whatever the high price that he or she willing to pay. So we need to come up and find that buyer. Okay, so basically that's the premises behind of this poor high that we need to get it resolved. Now, if you notice also, remember I was saying that we could come down and then take out a lot of these, unfinished business down here and then drag it down to this 4,500 level. And you can see today's sell-off after the early morning run-up, we came down and took out yesterday's, point of control and also some of the poor, the single print and the poor low that was left behind at end of October, and also proceeded down to take out the poor low on October 20th. And also the point of control, the naked point of control on October 19th. So right now, as it stands, there still could be, some little price movement here. You see this low here actually went below the 4,500, right? So let me see what that low was here, today, and it is 44.9775. So essentially it took out that 4,500. Now it doesn't mean that it could not go lower, because we still got a lot of unfinished business down here. So maybe it could get down to this, 44.70 area and 44.60 area. But right now, you see today, it left a lot of these single print, right? These single print area here that we might see it to come back up and fill the single print tomorrow, right? So maybe it could come back up and also, check this. Here's the point of control here. So the point of control is up here and the price is way down here. So unless we start establishing value down here, then the likelihood of the price move back up toward this point of control, which indicate that's the most accepted, price level at this particular time. Then, so then we will basically could see, the price will eventually come back up and check this point of control and also this point of control. And, then we might get this, this bounce back up for this all-time high here, right? The Globex, the pull high from November 23rd. So that is the picture that we're looking at, and based upon that, we will likely see another all-time high from the S&P 500 and also the EMini SP500. Now, of course, yeah, this could be, this time could be different, right? There's nothing is infallible, but so far, what this have been telling us has been relatively reliable. Okay, I'm not saying that it won't fake us out, and maybe this time it will fake us out. But in regardless, we'll watch the price action as the market move up and down. So we will, take whatever risk management that is appropriate to make sure that we are not, just focusing on this high here and not anything below. Okay, so be sure to smash that thumbs up, help me promote and share this video. And if you are new to this channel, press that subscribe, so subscribe to this channel. And for those that have not subscribed, click on that subscribe. So thank you for watching and stay safe.